Hello and welcome to the first DefiDive official podcast. On the show today, you have two of the founding team. You have myself, Josh, and I'm joined by Joe. Joe, do you want to give a bit of an introduction to yourself and a bit of background in crypto?
Hey Josh, it's great to be here on the verge of launching a brand new startup, which I'm pretty excited to jump into. My background in crypto is I first discovered it in 2011, read the Bitcoin white paper, and never turned back since.
That's a real hardcore, straight in there at 2011 white paper, and we'll get into more detail. But you really did jump in with both feet coming out of traditional world of finance. My background, more of a 1 foot in rather than 2 foot like Joe, but I discovered cryptocurrency back in 2014, and similar to Joe, read the white paper, did a bit of research, and really learned that Bitcoin could make internet money possible. And I ended up meeting Joe at a conference and joined his previous startup. But to go back to Joe's story in 2011, what were you doing at the time when you discovered cryptocurrency? How did you hear about it? Because that's also pretty early, right?
Yeah, so part of the backstory behind my intro to Bitcoin was that I graduated from kind of the boiler, the the the, the elevator pitch in a nutshell was I graduated from computer science classes straight into the financial sector. So I joined a bank in London. Where I worked with them on their back office systems and the IT side. So I also just so coincidentally, I just so happened to graduate straight into the financial crisis of 2008. So as quickly as I was offered the job in finance, a job that's seen as a job for life, a job that you keep, a job that's gives you financial security for your future. That was taken away from me when I was offered a redundancy just 2 to 3 years later because of what happened elsewhere in the bank. So that in itself gave me a bit of education about how the world works in terms of retail banking. I took some time out to backpack, went over to Australia where I ended up getting a job in an investment bank out there. So there I learned a little bit more about how the world of finance works. I was initially a little bit bitter about losing my job in London, but I saw it as an opportunity to learn more and question how and why the system is like the way it is. Fast forward to 2011, not only did I have that little bit of knowledge in computer science, a little bit of knowledge in how finance works, but the Bitcoin white paper kind of came about because some of my colleagues came across it and they sent it to me and said, Joe, this is kind of something that you're really into, right? You're really passionate about technology. You're always asking stuff about how banks work and how financial services are built. We think we want to get you to read this white paper and tell us what you think about it because there's some quite technical concepts behind there. And the moment I read it was the moment that I thought this is pretty damn game changing. I've got to find some way of making something related to this technology part of my life's work. And here we are many years later.
Yeah. So when they wanted your opinion on Bitcoin back in 2011, did they come from a point of skepticism and wanting to be proved wrong? I think particularly back then there was more of a negative attitude towards crypto, but you obviously looked past that and saw the underlying technology. What
Yeah.
was your assessment that you shared back to them, and did they agree with you or disagree?
So quite thankfully, actually, my colleagues at where I was working in Australia were quite fascinated, quite intrigued, but they were quite open-minded as well, which was definitely uh, not the sentiment of the rest of the market at the time. I'm sure we've all heard of stories of people accusing anyone who's trading Bitcoin to be into drugs or to be into nefarious activities. It's a very common story, especially back then when the technology was not very well understood. It was very easy to justify it as this is something we don't understand. You should stay away, be afraid of it. But my colleagues were really interested in the technical concepts behind it and why it did what it did in the way that it did and why technologists were excited about it. And one of the reasons why the technologists were so excited about it was because was like a digital money that was coded to be what we call a protocol. And the difference is when you code up a protocol as opposed to something like PayPal, which is a service, a financial service for payments, is that a protocol is free and accessible to everybody with internet access. And that alone, to build a monetary system off what computer scientists consider to be a protocol, is, in my opinion, absolutely incredible. It brings to the forefront the next generation of innovation within the financial services sector, which to date hasn't seen as big a amount of disruption as other industries.
Yeah, it's good, nicely put. Whenever I'm talking to someone non-technical and they ask me what is Bitcoin, how does it work, the way that I like to explain it is I say to them, Bitcoin is a new innovation, and before Bitcoin, people wanted to create money for the internet. I think like way back in when the internet was first made, there was like protocols like as placeholders for internet money to be created, and PayPal, their true vision was to create internet money, where they kind of got, say, halfway along that vision and decided it wasn't possible. And Bitcoin effectively solves the double spend problem. So if you imagine, why is it so difficult to create internet money? Well, everything on a computer can be copy and pasted. So how do you prevent people from copy and pasting money? And Bitcoin effectively solved that by creating the blockchain. So everyone has a record of who sent what. And when someone tries to send more Bitcoin than they actually have, then anyone in the system can recognize that and block the transaction. So that,
Absolutely.
yeah, so that's my favorite explanation to give someone who's non-technical. Um,
What was the experience like when you were to share your knowledge of Bitcoin in the early days? What were the interactions like? Did you come across some skepticism?
yeah, it was really varied. I would say mostly skeptical. For context, this is still 3 years after you, so you're 2011, I'm 2014, and I discovered Bitcoin in my final year of university. And there was a few people I was able to convince to invest, and but then equally there was a few people that were, um, you know, very skeptical. And I think the skepticism comes from one, they can't understand it, so they don't trust it. Secondly, they hear stories in the press associating cryptocurrency with negative things. And then thirdly, I would say kind of too good to be true. I think I think when people learn about Bitcoin, I think they identify like flaws and drawbacks quite
Yeah,
quickly. And
yeah,
pretty much any form of money has flaws and drawbacks, but what they kind of identify is just problems we have with money in general. So, for example, cash is difficult to trace. Um, Bitcoin can be difficult to trace, but you do have the blockchain, so it's more traceable than real actual cash. And uh, people describe it as a bubble sometimes. That's another issue. But then pretty much every financial asset has some degree of being correctly valued and some degree of being a bubble. So a good example would be gold. So gold does have some real hard utility in jewelry and industries and components, but at the same time, gold is also valuable just because people think gold is valuable, and gold in itself is a bubble. Company stocks they trade at um, their market cap is actually higher than their assets they own, and that's because people think they'll have future cash flows that are, greater than what they are today. So we have companies trading at multiples of hundreds, and I find that people pick up on these flaws of Bitcoin, but they don't really realize that these are not deal breakers, or they're just, common problems we have with every type of financial asset?
Yeah. Yeah, they very quickly overlook the technological innovation and the innovations of financial services, but they're very influenced by the flaws regurgitated by mainstream media.
Yeah.
Whereas an apples to apples comparison is very rarely what you get in these sources, which is, yes, it's quite an interesting space to be. But those who are open minded enough, especially in the early days, to kind of get outside even their own comfort zone to choose to believe in it, to take a little bit of risk. Those are the people who were certainly rewarded more than others.
Yeah, it's true. And yeah, I'll myself admit that I thought Bitcoin was a scam the first time I heard of it. I thought, it's internet money. It cannot exist. But I think, thank God, one thing I did do was I did actually do further homework. I did, allow myself to be convinced otherwise, right? And, when you just look at the facts, it's actually, it's a new technology and you can invest in it like you can invest in tech companies, right? But when you heard of Bitcoin, you were working in your bank in Australia. How did you go from that to creating your first startup, which was Magna?
So for a period of a good couple of months, I'd read this Bitcoin white paper. I'd shared a little bit about it with my colleagues, and we had some discussions. And I pretty much decided at that point that I did want to work on something related to this technology, no matter what it was, whether it was to work with a protocol or to integrate some sort of banking system with Bitcoin. And I knew I just wanted to play more with this technology. So I think the first things first back then, what you'd do is download the wallet, send some Bitcoin, go to a Bitcoin faucet set up by the Bitcoin founders. I believe I got my first Bitcoins from Gavin Andresen and his Bitcoin faucet. Would have been something like 0.01 Bitcoin back then, which was not really worth discussing, but certainly now is a little bit of an amount. Um, but fast forward to playing with my first Bitcoin, I quickly dedicated a lot of my working hours to finding out how I could uh, use this technology just or integrate it into some sort of online system. So what I ended up doing was I had a bit of a fascination back then with automated trading systems, arbitrage trading, and a field called proprietary trading, which is where you code up a computer to analyze mathematical formulas in the markets, download all the data, and come up with some sort of automated trading algorithm. And so at the time, I logged into one of the only Bitcoin exchanges that existed at the time called Mt. Gox. I saw that they had an open API, which essentially allows anybody who knows how to code to send automated instructions to the exchange to execute trades on your behalf. I'd written a trading system. It took me about 6 months or so to write. I just at home, I was just downloading data onto my laptop, finding ways of getting it to send trades out by itself, and essentially not necessarily reinventing the wheel, but finding out what was already done in a financial services and applying it by myself with Bitcoin, which I believe not many people were doing back then. And essentially just having fun. Bitcoin back then wasn't all about the money. It's certainly back then the people that were involved were more in it for the technology. But it just because it had a financial value and traits, it made it very interesting integrating into financial systems. It was kind of like a way of me. I honestly looked at it as a way of me learning more about existing financial systems, but playing around in my own kind of little domain. Little people used to refer to it in a meme, and I think you do love this meme that says, Bitcoin, funny internet money, right? So I was just in my own little world in my bedroom after work, just kind of coding away, playing with this funny internet money, trying to get it to trade it, get my trading algorithms to trade itself. But yeah, little did I know that it would be, worth something one day. I was just having fun learning about how exchanges were built, how funds were sent around, essentially the world at this point, and just being fascinated about how the technology was put together, essentially. And from that, um, after 3 or 4 months of playing around with kind of automated trading systems, I kind of decided I wanted to be more on the other side of the equation. I'd routed through tens of thousands of dollars of trades at this point to Mt. Gox, and I thought to myself, if the exchange infrastructure in the Bitcoin space is still very not very mature. So I decided to try to offer a service to customers instead. So what I did was I took my trading algorithm and all of the trading bots code, and I recoded it into essentially a trading platform that essentially allows other people who want to get access to leverage trading to be able to use essentially the code behind my bot to execute trades of their own. So, long story short, in a nutshell, what that basically means is after 9 months worth of moonlighting, I'd done my job in my in the daytime. I'd come home at night and I'd code sometimes till 2, 3 a.m. in the morning. I'd built essentially a full blown Bitcoin trading system, which was essentially the first of its kind. I launched it and shared it with some of the community members in the Bitcoin Talk forums. And it took off very, very quickly. I believe within 3 months, we'd brokered about 10,000 US dollars worth of transactions. And the rest, as we say, is history. This is when I decided to move back to London because what I didn't even really call it a startup back then. What my pet projects started to earn for me in my spare time begun to overtake what I was earning in my day job. At that point, I thought, there's only one option, and that's to leave my day job and try and make it in the world of startups. So I flew back to London. At some point in one of the Bitcoin conferences, we met, and then we started to work together, which was an incredible moment.
Yeah, it was good experience. And to recap, your product was effectively a service that let users trade on multiple exchanges, and they could also use leverage if they wish, which tends to be quite popular among crypto traders. And you would charge a commission for each trade that a user would place, and that was effectively the business model of the startup. And I guess the revenues from that was kind of gave you a bit more reassurance to leave your traditional salaried job and do crypto full time, right?
Yeah, and this was pretty unheard of back then. We were definitely seen upon as very strange people to be quitting a stable job to be working with funny internet money that absolutely nobody seemed to trust. But for some reason, we were persuaded enough by the white paper or the community or what was going on in terms of the development or perhaps what it represented to just want to work on this full time. And yeah, I can happily say I've got no regrets in making that decision back then. I think the space back then was just so exciting. It was so filled with activity, as it is today, actually. It's not too dissimilar to how it is today, but the excitement was there, and it's just the novelty of the fact that you're in a field where you're learning something new and being challenged every single day, challenged in what how the world should work in your own kind of mental model, how the world of finances work in your own mental model, and then to see this kind of resurgence of activity in the Bitcoin space and all of this financial infrastructure being built up, whether it be trading platforms, exchanges. It's the flurry of activity is just incredibly exciting, in my opinion.
Yeah, I remember 2013, 2014 era. There were so many Bitcoin startups booming. I think now you have a lot of DeFi startups, and then back then it was like OG Bitcoin startups being built on the original blockchain and so on. And I think one of the coolest things that we did was we launched one of the first, if not the first, savings account for Bitcoin where users could earn interest on their deposits. And I think we launched this either late 2014 or early 2015. And if you look today at the industry, everything's all about earning interest on your crypto. And we were kind of 5 to 6 years ahead of the market.
Yeah.
And that's like 5 to 6 years in crypto is almost like 50 to 60 years in other industries, given the pace that it
Mm.
moves.
Traditional finance, yeah, for sure. That moves very, very slow. But actually, there was a lot of industry firsts we did. So we were one of the first leverage trading platforms out there. One of the first to, I think you mentioned earlier that we plugged into multiple exchanges as well. So we offered that layer of safety. So let's not forget, back then, it was definitely the Wild West, and the press weren't afraid to just call it the Wild West because back then I didn't necessarily want to admit it, but it absolutely was the Wild West. Exchanges were set up, would close down and would take their clients' money, left, right, and center. And back then, we offered a layer of security, so any clients that would trade with us would have their finances protected against exchanges collapsing. And we protected quite a lot of our clients during that time. So Mt. Gox, came and went. The other Bitcoin exchanges had their own issue. I remember Bitfinex got hacked at a certain point. Every single exchange was at some point a target of a hack. I believe Bitstamp also had some of its client funds missing as well. So yeah, what excited me about building that product, as you said, was, in terms of finance, the one misconception that was kind of broken down for me when I started to learn about how banks and financial systems work is that, it's best for you as a founder, as somebody who's offering financial services to best create a product that suits the risk appetite of the client. So I was very proud in the fact that we did create a product that would generate revenue, which was a trading platform, and we did only kind of encourage people who had that high risk appetite to use that side of the platform. But at the same time, we built a product, and this was to some degree, we call it nowadays a loss leader. It was a very, I want to use the word altruistic, but perhaps it's wrong context. But we essentially just gave away our profits to our savers,
Yeah.
which actually for me was very motivating to know that if it's okay if you have a low risk appetite, you don't want to take too much risk with your funds, essentially speculating on a very volatile market, then you could deposit your savings with us at Magna, and we'd pay out that interest rate. Years before the market has evolved to offer it now. So I believe at the time we were paying a good 2 to 3, if not higher percent per annum interest rate on Bitcoin holdings, which even today is quite unheard of actually. So yeah, very proud of what we achieved, and yeah, very excited to have launched that product alongside you.
Yeah, yeah, it was really good. And I remember it was it required like some people required to convince some people that it was true, right? That you generally
Yeah.
could earn interest. Like now, it's everywhere. You can earn interest, and people don't think much of it. But back then people needed convincing. So even the people that had been convinced on the merits of Bitcoin then needed to be convinced that they could earn interest on it. And
Yeah. And now all the exchanges are offering it. So I guess perhaps we did help pave the way in some manner.
for sure, for sure, I think we can take a lot of credit. um, do you want to go into what happened to Magna and how things came to an end with that startup?
Yeah, let's go for it.
So, what was kind of the reason for closing down? I think things were going pretty well, revenue generating, protecting customers. We had innovative product, but what was the reason for wanting to close Magna down?
So I think after 2015, 2016, there was quite a long crypto winter where, Bitcoin's price unfortunately just did nothing but slowly go down. And at the time, the infrastructure was not quite there. The investment appetite for crypto in general was not huge from VCs. There was still quite a lot of skepticism, unfortunately. So at that point, I myself decided to step back a little bit, appoint a new interim CEO. But unfortunately, the new CEO's values weren't quite aligned with the existing team. He didn't quite have the experience in terms of the financial services aspect, and he didn't quite have the experience in terms of running a startup, and he didn't quite have the understanding of cryptocurrency concepts. So, kind of all of that baked together, made us decide as a founding team, the best way to proceed is probably to protect the value of our clients, of the trust that they gave us, because we were always led by this mission statement of always seeking to do the right thing, right? So where a client trusts us, we should act in our highest level of fiduciary duty to make sure we do our best to protect the clients, to honor every single satoshi that client had entrusted us with, and the same went for every single employee that contributed to building Magna into what it was. So the Magna definitely would not have been what it was without the valued contributions of all of its staff. So I think the best course of action when we decided what to do with Magna at that stage was to close down the company, just to take some time off and to be able to essentially preserve all of the profits that we'd made so far and distribute it fairly back to the founding team. And yeah, I was very, very proud of everything that we achieved, and the time off that we got after that uh, was wonderful to kind of recharge, because I felt like it was quite draining for us. We do like to share these stories of success, especially for startup founders as well, but we do forget sometimes or we do tend to overlook, the stories behind the scenes of mental health. And hats off to every single employee who spent time, or person who worked with Magna at the time as well. We were working in an industry where we were constantly against the firing line from regulators, from the media, from even some of our family members and friends as well would not have understood why we wanted to work with this technology. And so a huge amount of sacrifice was made. And for me, it's just really, really motivating as a founder to know that the time and the contribution was hugely valued. So at the time that we decided to wrap up and close the company, we decided to pay back every single cent satoshi that our clients had deposited. That process took about a year. Beyond that, our company had fairly decent crypto profits, Bitcoin profits. So we decided to distribute that to the founding team. Very happy to report that the employees who kept it were handsomely rewarded by a subsequent price raise. Although that's not to my credit, of course.
I mean, you generated the Bitcoin though, right? And kept it in the Bitcoin, most importantly.
We all generated the Bitcoin. It wasn't. I'm not going to take credit for that. But yeah, it was really, really, it was a really kind of serendipitous point where we'd made a huge amount of sacrifice, including taking some salary cuts as well from our previous roles, and to be rewarded, to be able to be in a position at that point where we decided to wind up the company, to close it, if not temporarily, to distribute the profits back to our founding team, and regroup, take some time off, and decide what to do next.
Yeah, I think it's I think like second to having some kind of crazy unicorn exit. I think the way that Magna closed down was like a really it was a really graceful and fair way to close down a company. And I know you went through a lot of trouble to do that, so you do deserve a lot of credit for the work you put in during that time period. So
I appreciate you saying that. And I always believe, if you get put in this position where you are lucky enough to be entrusted by someone to be almost like be a custodian to their funds, if you're always seeking to do the right thing, it's that pay it forward mentality. If you're always seeking to do the right thing, to make everyone's dues, nice and fair, then I think, what you get paid back by, the customer's love for our product or who we are as a founding team is just amplified. And certainly, I think a testimony to that for me was seeing our savings product taking off. The more profits we gave back to our clients in rewards for trusting us, the more they trusted us with more of their funds. And it was a crazy time, to see that that value being entrusted to the business and so much, and so many clients referring their friends, and the business growing and flourishing, and same to the founding team as well. So to show that respect for the amount of time that was sacrificed in building the business, it feels great to be able to kind of somewhat pay it back to the founding team as well.
Yeah, absolutely. So with this chapter of your life coming to a close, what did you do after Magna? You've got the world at your feet at this point, I guess.
It wasn't quite like that. So I'm certainly not going to step out there and say, I was rolling in it or anything like that. It's just
You've got a
the
lot of options. I mean, you've already quit your job, right? You've got nothing to lose. You can go back to that if you really wanted. You could do another Bitcoin startup. You could
yeah.
go on a vacation. What was your
So
mindset and what were you thinking?
So I mean, this is where the reality of the story that's told in hindsight looks a lot different to the situation at the time. In reality, what happened to me then was my mental health was a little bit strained. I was really, really stressed out. I was really, really burnt out. I'd had some drama in my personal life, which really took it out of me. So
Mm.
at that point, which we closed Magna, which was quite a long process to be fair, I decided to take about a year or two off. Um, Back then, the amount of money we made, certainly when we closed down the business, it was. I'm not gonna say it was huge. Um, it certainly helped.
This was like 2018 at the time, right? Maybe 2017.
Yes. So I mean, interesting, I guess, twist in that story. Again, I wanted to tell it as real as possible because it was very visceral, right? In hindsight, we're just like, yeah, we ran a Bitcoin company. We took some Bitcoin out of the company because we did all right and we smashed it. But in reality, like the price back then was fairly low. So it gave me comfort in knowing that I could take a couple of years off. So I decided to take at least 2 years off to kind of work on myself, kind of recuperate, work on my both physical and mental health. But in reality, yeah, Bitcoin wasn't very highly valued back then. We were still up against a lot of negative press. Um, Not only that, but the existing incumbents, the existing banks were paying their PR departments to bash Bitcoin as much as possible, right? So at this point, I was still pretty nervous. I could have felt fallen back on a job. I'd had a taste of startup life, so I personally didn't want to. That flexibility of being able to turn up to the office a little bit later, not be beholden by that 9 to 5 schedule to have to perform to make your boss look good for that performance rating. It wasn't life for me. So at that point, I was going to take some time off and regroup and decide whether I wanted to go back into work or take some sort of exec role somewhere else or do another startup, which I really wasn't keen to do at the time.
Hmm. I
But
see.
yeah, towards the end of that 2 years, the price of Bitcoin started to rise and rise and rise
What year
and
was this?
rise.
Was this the
Rise.
2017 bubble then?
Uh,
Or was this, are you talking about the like 2020 run up?
I guess both, because by the time we closed down Magna, we'd taken a certain amount of crypto out of the company to repay our founding team. Um, and subsequently, the price went up. So, yeah, that must have been 2017, 2018.
Hmm.
And then this was when activity in Ethereum picked up. So I did spend quite a lot of time keeping up with the industry after a short break and following the Ethereum innovations quite closely. And then we went through a phase of ICO boom, which was everybody wanted to copy and paste and create their own coin, their own token. And we spent some time looking at that as well, investing in some of the projects which we thought had some potential. Um, and yeah, so during that time as well, more recently, I decided to see what life in Asia was like. So I moved out there, and Malaysia's was where I ended up. And I just so happened to have met a community of people out there who are very avidly passionate about cryptocurrency. So I've started to get more back into the industry, following the excitement of the NFT space right now. And yeah, very excited to just see so much innovation being so accepted by so much mainstream media now and mainstream adoption happening.
Yeah, yeah, it's really exploding. I do remember a time when you could kind of just keep up with everything happening in Bitcoin because it was smaller, so you could keep track of things. But now you need to almost like pick your focus, whether you want to know everything that's happening with Bitcoin or maybe you want to know everything about Ethereum. Even that probably is not possible, or DeFi, NFTs, Polkadot, Cardano.
Yeah.
It's really exponential. I remember, the 2017 ICO boom as well, and that felt like the pace of innovation had stepped up, and now it's probably like tenfold that with NFTs and all these DeFi projects happening. So pace of innovation is definitely kicking up higher and higher.
Yeah, definitely. It's hard to keep up nowadays with everything that happens, but it's just as exciting.
Yeah, well, I think that's a nice little segue to talk about uh, DeFi Dive. Do you want to talk us through how you came up with the idea for DeFi Dive and what the product is?
Yeah, so for many years we've been involved in the crypto space, and for many years we've been following the development of the markets and the establishment of so many different exchanges out there, so many trading platforms out there, and so many nowadays it's financial services. So DeFi platforms, you get your different tokens, different token values, your different projects, your different NFT projects as well. So the space is, as you just acknowledged, is very very wide now. And one thing that's always kind of bothered me, and perhaps the founding team of Magna as well, is the sources of data are very fragmented, right? It's very hard to get a good eye on what's happening in crypto at any one point in time. And the existing financial system has some very nice platforms, Bloomberg platform, your Reuters platform, that, really in a compact view show really concise news articles about what's happening in the world and equates that to the financial data to back it up as well. So after having this conversation very casually for many years, I said to the team, I would always love to create some sort of a price website that's clean, that's tidy, that doesn't have adverts everywhere, that just essentially helps the consumer get the information that they're after, because information gets turned into knowledge, and that knowledge can be used for your very powerful decision-making process. And, to give that right information to the right consumer is um, definitely a problem which seems simple on the offset, but it's really hard to crack. And I thought, with the capable team that we've got, why not try crack this problem head on? Why not create essentially a price data website that's clean, simple, quick, and easy to use that everybody can log on to and find out the information they want to find out very, very quickly, very, very concisely, in a way that's not confusing and that's trusted. So my vision for DefiDive is essentially to have a website for every single type of consumer, whether they'll just want to log in to check the Bitcoin price of the day, or to perhaps check what the news was of that week and why Bitcoin's, say going down or going up that week, and to be able to find that information very, very quickly, and to be able to make their own decisions.
Yeah, it's exciting project, and I remember you talking about it when we first got back in touch in 2020, and then played a bit of gaming, and then you went to Malaysia. We didn't speak for a little while, and then all of a sudden it was, hey, this is going ahead. Do you want to be part of it? And
Yeah.
that was like a pleasant surprise for me, and I jumped at the opportunity. We've got some of the old Magna guys, and we also have like fresh developers, fresh eyes, and a really qualified team working on this. So I'm excited to see where this goes, and at the moment we're working towards our alpha release, which we're hoping will be sometime during Q4, and would take things from there really.
Yeah, I'm really, really excited about the team that we've put together. So it's some of the old Magna guys and yourself, essentially is becoming part of the founding team of DefiDive. It's just very motivating to know that, we're still around, we still love to work with each other. And, some of the problems that have existed in crypto it's nice to know that we all share the similar pain points and are just as passionate about trying to come up with a solution to solve it, not only for ourselves, but being a solution that we all love and would love to share with other people as well to help make their lives easier. So I
Yeah,
remember us casually saying, across the Magna years, these data sources, they're okay, but they're not great. And over time, the data sources of from the exchange prices and multiple different exchanges hasn't gotten easier to read over time. But it's a problem that we know we can move the needle on, and it's just very motivating to know that the rest of the team shares the same sentiment and are very very talented at being able to do this. I'm excited for the launch.
yeah, and you were doing quite a bit of yield farming and like investing, as you said. Would you describe yourself as like a full-time crypto investor at this point in time, and prior to the founding of DefiDive, and I guess part of this idea kind of came out of your investing and how difficult it is to look up, all these different market caps, prices, gas fees, and you've got a very long tail of a lot of DeFi projects now.
Yeah.
Do you want to talk a little bit about your crypto investing?
Sure. So I guess after my sabbatical from Magna, after that closed down and I took a year or two off, I started to get back into crypto. And all of a sudden, over the last 1 year, 2 years, the space has exploded. There was a little bit of buzz around ICOs, and now it's all about yield farming and DeFi, which stands for decentralized finance. So I guess I wouldn't necessarily describe myself as an investor, but I guess what I do is pretty much investing day to day. Checking the cryptos, checking where I should allocate my crypto to back which projects. And I think one of the problems that I came across, as you identified, was, when I look at these new projects, they seem to promise the world, but in a nutshell, I want to read the economics of what they've created, what the token supply is. And I want to read a little bit of blurb about the project, what they hope to bring to the table. So, for example, a project like Chainlink, they have some very smart developers working on their platform, but it essentially is a price oracle for the Ethereum space. So what that means in a nutshell is it feeds in data from the internet into the blockchains, and it's these kinds of infrastructure investments in the cryptocurrency space, which I personally am looking for and want to allocate more funds to supporting these projects, because I think they'll be a big part of the cryptocurrency ecosystem moving forward. And without that knowledge of being able to log onto a website to just check the details of, say, for example, the Chainlink project, to see which developers are working on it, to be able to have links to check out their social medias, to see their white paper. Without all this information, you're not really making as much of an informed decision as an investor. And certainly, we've all lived through some pretty terrible investments in the cryptocurrency space, because they are absolutely everywhere.
Big winners and big losers.
Absolutely. And the best advice that we could ever give anyone who's new to crypto is, always do your homework. I know all of our team is always saying that to all of their friends as well. Do your own homework. Don't just trust anything on face value. Try to understand as much as you can about the technology, because then when you invest, even if it goes up or even if it goes down, at least you've made that decision by yourself off the best of your knowledge. You've taken the risks. Hopefully some work out for you, but the others that don't, at least you've not just bought on a whim. And to be able to have that information on your fingertips is very, very powerful. Fast forward to today, we talk a lot about decentralized finance, or DeFi. And what the activity which people are doing a lot now is something called yield farming, which is to be able to send their Ethereum or Bitcoin to essentially a website or a web app to be able to stake their coins, which is essentially the mechanism of depositing their cryptocurrency for somebody else to borrow. And the platform matches a lender to a borrower. So the borrower would pay a higher interest rate, say, for example, 5% to borrow this other person's Ethereum for a couple of days. The lender would benefit from a 4% interest rate, which they otherwise wouldn't have received if they didn't deposit their coins in the first place. So these kinds of market mechanics, for me, these economics are very, very fascinating, because once you create an economic mechanism like that, there's a flurry of activity from buyers, from sellers, from lenders, from borrowers. And that for me is seeing that economic progress, to me, is very exciting, because I know that the market surrounding that economy is just going to grow if you create these opportunities. So yield farming is something that our team loves to do. We love to find out from which different websites are the best yielding opportunities. And some days, you could get a 50 to 100% APY yielding opportunity that you might want to deposit your funds into, but then that opportunity might disappear within a couple of weeks because it's a very real-time market, and you might want to reallocate your funds to perhaps a safer, more stable 5% APY opportunity on perhaps a more reputable platform. So it's a balance of risk and reward versus, the knowledge that you can acquire for yourself and what you can find. And having that knowledge certainly helps make better informed decisions as to where to allocate your funds or which platforms to trust more than others.
Yeah, I think that's really well put. And like you said, I'm excited to work on DefiDive because information and education are really important in the world of investing and cryptocurrency, even more so. And even learning the basics is extremely important. For example, DeFi is all built around trustless systems. So using smart contracts to ensure you're being paid what you're supposed to be paid, sending money across decentralized networks. DeFi is a bit of a new movement, but it's the same principles that was used to create Bitcoin, really. So if you are a informed investor, you can quite easily see what is going to be a good investment or a scam or a bad investment, really, because you can see, what follows the principles of cryptocurrency and, what is genuinely too good to be true, right?
Yeah, absolutely. So do you remember first learning about DeFi? I'd love to know what your first thoughts, because it is an absolute minefield, and to be able to kind of break that down for people is, for me, it's very rewarding, right? And the information is out there. It's a little bit fragmented. Is it a YouTube video you check out, or
Yeah.
is it a guide with all these terminologies which are quite new to you? What was that process like for you?
Yeah. So for me, like I just said, it started off with going over the basics again. So, um, you know, I've been in Bitcoin. I've been interested in Bitcoin and cryptocurrency since 2014, but I would say I've always had maybe like a waving interest. I haven't, been checking the news every single day, learning about every single thing that's come out, in the past 6 7 years. So DeFi kind of, crept up on me, and when I saw it was taking off, and I wanted to learn more, the first thing I actually learned about was Bitcoin again, and just re-going over how Bitcoin works, how blockchain works, what's proof of work, how does the algorithm work, what's the difference between proof of work and proof of stake, and then at that point you kind of get a bit closer to DeFi because proof of stake effectively rewards users for staking their coins. So you kind of earn interest for holding coins in a proof of stake cryptocurrency. And, DeFi is just an extension of what we've seen before, really. It's pushing the capabilities of cryptocurrencies to a new level where users can lend and borrow money from each other and, use smart contracts and so on. But really, for me, it started off with going over the basics of Bitcoin and blockchain. And then once I kind of had gone over those points, I started to learn, about proof of stake and then yield farming and about the new cryptocurrencies as well. So Cardano, Polkadot, what are they doing? What's different to those versus Ethereum? And yeah, the one thing I could just really keep iterating is start off with the basics, even if you're getting into cryptocurrency in 2021. I would recommend still learning about Bitcoin before jumping into the world of DeFi.
Absolutely, it's great advice. It's great advice.
Thank you. Well, to wrap up, we have some quick fire questions that we can go over, and I'll join in with these as well to keep it more conversational rather than an interview. First one is probably the most sensitive one, but we're not discussing quantities here. But what is the cheapest Bitcoin you ever purchased?
Okay. So I started buying Bitcoin when it was $2 a piece back in 2011, just a small amount. But actually, the first Bitcoins which I received was from Gavin Andresen's Bitcoin 4 set. So the founders of the project, the ones who coded up the protocol initially, were just giving away Bitcoins because nobody saw much value in it back then. And so, yeah, cheers, Gavin. This one's for you.
Yeah, for me, I think
Those were my first Bitcoins. Yeah. How about you? For you?
Yeah, I was just going to say, for me, the Bitcoin faucets were kind of like drying out at those points. Um, but there were actually some Dogecoin faucets around that I could claim. And um, for Bitcoin specifically, I think the cheapest I ever bought was about $200. Um, I would like to say that was my first purchase as well, but I actually I came in at a bit of a bubble, and I probably made my first purchase around 800. It sounds cheap at the time, but when you first get into cryptocurrency and you see Bitcoin go from 800 down to 200 in a relatively quick space of time, it's a bit of a baptism of fire. But um, we could do a whole nother episode on this, but dollar cost averaging is something we could also recommend to new Bitcoin comers. And thankfully, I did not just go all in on the 800, but I also was able to buy the dip around 200 as well. So yeah, 200 is my answer.
Josh showing the community how diamond hands is done. Glad you're
Yeah,
still with us and still alive and
yeah.
ready to tell the tale.
I mean, this will be another episode in itself, but what people don't always appreciate is timing your sales is almost difficult as timing your buys. You know, I probably sold too much in 2017, I would say. But but you know, I am still definitely holding crypto today as well. Um,
Good to hear.
but the reverse of that one then. So, what is the most expensive Bitcoin you ever purchased?
So that's an interesting question because I did keep on buying Bitcoin, I believe, up until the low thousands of dollars. But back then, you know, the early Bitcoins which I bought went to essentially fund Magna as a startup. So at that point, I stopped buying it because we were essentially earning Bitcoin
Hmm.
then.
Yeah.
So yeah, I guess low thousands. I can't remember exactly, but yeah, I certainly didn't buy any beyond once it got to tens of thousands. I thought, screw that, it's so expensive. But hindsight tells you, isn't that cheap?
Yeah, yeah. I mean, for context, when we were working on Magna, I always felt that 10K was, and this is 10K dollars. 10K dollars is the um, absolute maximum Bitcoin could ever be worth. I thought that was hitting the jackpot, and yeah, it's far exceeded that. But for
How about
me,
for yourself? Yeah.
yeah, yeah, for me, I'm still purchasing Bitcoin regularly. So I think the most expensive Bitcoin I've ever purchased is at $53,000. So we've gone from very extreme lows to highs here. But
Mhm.
like I said, dollar cost averaging is a method that is quite advisable. So I'm personally still putting like the odd 100 quid, 200 quid into crypto here and there. I don't do it strictly every month, but just kind of when I feel like it, really. If I feel like it's a good time to buy, I will ignore like previous prices and just objectively think, is now a good time to buy or not? And if I think it is, I will. And I try to do it somewhat regularly because you can't time the market perfectly.
Yeah, we'll have to share with the community our own personal trading and investment strategies. I think it's very valuable to know and hear these stories in hindsight, especially the stories of investing that doesn't quite go right. Because everybody loves to share these success stories, but nobody loves to talk about the time that you bought at 800, held on at 200, and
Yeah.
yeah, just survived to tell the tale as well. But yeah, I think the thing on price is everybody in the history of our involvement since 2011, since 2014, always comes up to us and says, "Is it expensive?" Assuming that we can tell the future when we really can't, right? But
Mhm.
it's what I say to these people is, if the asset price is more expensive tomorrow than it is today, then today's price is cheap, right? Because actually, I was faced with the same. I've recognized this pattern now in myself. Even at $2, when I looked at the price graph history, it was down here to begin with. I'm just like, that's ridiculous. How stupid is that? $1 was just like people thought, 21 million, $1. It can't get to that stage. Why would it go even higher? And the same happened at $10. Same happened at $100. It crashed back down to $36 from 36 to I don't know what, $14. Everyone was like, it's overpriced, it's ridiculous. And then $1,000, the same conversation happens. $10,000, the same conversation happens. And so at this point, I've realized it's not questioning, what the price is doing day to day, but
Yeah.
it's, recognizing, where you find value in a technology.
Yeah. Yeah. We'll do another episode on investor psychology and investing for sure. We've got lots to share.
Excellent. Yeah.
So what is your CFI, so centralized finance versus DeFi portfolio split? So what percentage of your assets is traditional cash, stocks and bonds, and what percentage is in cryptocurrency?
The majority of my assets are in cryptocurrency. So I'd say at least, a good 90% odd is in crypto.
Nice. It's pretty hardcore.
Yourself?
For me, I think I'm about 50-50.
Yeah.
Yeah. And I think, again, we could go into another episode, but I don't think either of us would recommend putting 90% of your net worth in or 50%.
No.
I think the key difference is when you put in a small amount and then it becomes a large amount, then you can decide whether to keep or sell, right? It's very different from, having 90% in is very different from investing 90%, right? It's about when you take profits, right?
Correct. And I guess, without giving anyone investment advice, just do acknowledge that crypto as a space in general, you should be considering it as the highest of high risk investments in as part of your portfolio. And generally speaking, people don't recommend you putting in more than 5% of your net worth into anything that's high risk. But yeah, be informed, understand the space, and certainly for myself, I'm more comfortable knowing that I just know the space widely enough to know what the potentially failure points would be. So
Yeah.
absolutely, it's good advice.
So do you have a favorite cryptocurrency?
Shall I go the classic Bitcoin? But Ethereum's got so many innovations right now.
None of us is old.
I certainly do owe a lot to Satoshi's creation, Bitcoin. So I do want to say that. But the crypto I spend the most of my time in these days is Ethereum, just because. So shout out to Vitalik. Cheers, Vitalik. So a lot of the activity and innovation in the space comes out of Ethereum these days. So actually, when I share crypto with people, what I say to people is if they're seeking to buy their first crypto, is to essentially buy 50-50 in terms of percentage of Bitcoin and Ethereum. So favorite, I think I'm gonna have to stay faithful and say Bitcoin, because I wouldn't be in the space if it wasn't for the Bitcoin white paper. Yourself?
Same answer.
Yeah.
It's like
the OGs in the house here.
Yeah, it's a question of like heart versus brain. Brain is telling us Ethereum, more potential. In our hearts, I think, because we've been in Bitcoin for longer. It's the OG classic. I just like the name and the logo as well.
Yeah.
Not a rational thought, but yeah, that's my favorite. Okay, moving on to another favorite is, what's your favorite NFT?
Oh, NFTs. NFTs, let's explain it to people. Non-fungible tokens is essentially the newest innovation in the space. Is people have the developers of cryptocurrency have essentially behind cryptocurrency have essentially allowed digital artworks to be bought and sold on blockchains. So my favorite NFT, I think it has to be Cool Cats. So these caricatures of these cute little cats with different accessories, and some are more rarer than others, and they're very, very popular. They're very, very popularly traded, and yeah, people love to use these NFTs now as their profile pictures. So yeah, I believe on one of my profiles I might have a cool cat as my mascot, and yeah, so that's my current favorite NFT. How about yours?
So I've only recently dipped my toe in, and I got my first NFT about a month ago, and it's one of the like not well known projects. It's called an IAM, and I honestly just bought it because I liked the artwork of it. It's a little avatar of a baby chicken, like a chick, effectively. And I just thought it looked good. And I also looked at the what's been traded on OpenSea, and I felt like this particular NFT was trading at a discount compared to the others in the collection. So yeah, I'd say I have to go with my own NFT, wouldn't I? Really, so I'd have to
Yeah, you'd
say
have to.
the chick from the I Am collection is a baby chick, similar color to this T-shirt.
Perfect. I've seen it on your profile pictures already.
Yeah, well, I'll try and edit this after recording, and I'll put our NFTs up for demonstration.
Perfect.
So, final few questions now. Um, are you bullish or bearish on Bitcoin for the remainder of 2021? I think long term we're all bullish, but what do you think about short and medium term?
So as of today, there has been a bit of news in this week that's made the Bitcoin price drop. I believe, what is it? Do you know what the price is trading at the minute?
42. I think
About
it's down
42,000.
from 46-ish
Yeah, so
earlier.
it's had a high of 58,000, I believe, this year. It's at the 42 at the minute. So I definitely am very bullish from where we're at today. I think it's very undervalued right now. And everybody, my phone is lit with people wanting to buy the dip. So that tells me that if that's a trading signal, then it'd be a very strong signal at the minute. How about yourself?
Again, we'll probably have to go for another episode to give these answers full justice, but I'm feeling a little bit bearish,
Okay.
only for the remainder of 2021, just because we've had this big bubble, and a lot of people are really interested in these projections of Bitcoin based on cycles. So stock to flow model, which is a one of the most famous models, which tries to project the price of Bitcoin based on halving cycles. And I think there is a risk that these models become invalidated in the remainder of 2021. And I think that could cause a bit of panic when these models that are putting a very lofty price target on Bitcoin prove to be false. So that's kind of making me feel a bit bearish, but I'm still, a long-term believer.
Mm,
We've seen with crypto many times that it goes through these bubbles, and it always settles at a price that's higher than pre-bubble, and
yeah.
a few years later, the process repeats.
A fan of the old technical analysis, I see.
Yeah, I mean, would I call it technical analysis? I'm kind of It's either technical analysis or I'm banking on the technical analysis of others being wrong. But
That's called
um,
contrarian trading.
yeah,
Contrarian technical analysis. Is that the thing?
potentially.
We've seen and heard some many crazy things in our time. And one story I love to regurgitate was of the community of traders who love to follow the moon cycles. But perhaps we'll save that teaser for another episode.
Yeah, we will. And me personally, I'll be holding even if my bearish outlook comes true. And then final question: if we cast our minds forward to 2030. Which cryptocurrency will have the higher market cap in 2030? Ethereum or Bitcoin?
Oh, we're talking. I have this long debate with people about the flippening.
Mm,
Um, I'm going to stick with Bitcoin. I'm going to stick with
nice.
Bitcoin. I
Very
have my
logical.
reasons. I do think Ethereum will be used a lot more, but I think the analogy of Bitcoin being the gold of the space is always going to kind of be a common underlying theme, regardless of where the space goes. I think, yeah, Bitcoin is definitely seen as more of the store of value token. So, because of that reason, I'm going to say Bitcoin. Yourself?
I have similar thoughts. I think um, beyond 2030, I would say I'm more optimistic about Ethereum because of the utility. But I do think there's a lot of like 10 yearish potential for Bitcoin to do very well if more institutions start buying cryptocurrency, and I think it's likely that they would favor Bitcoin for the store of value reasons. And generally, you can buy Bitcoin as an investment, but I think most institutions would favor Bitcoin, and Ethereum will be bought when people want to use it for its utility. So yeah, I think maybe for 2030 Bitcoin, but maybe once you get to 2040 or 2050, then that's when we could see the flippening in my eyes.
Excellent. We'll just wait and see if that happens.
Yeah, we've only got to wait another 30 years. But I think that wraps up everything. Have you got any closing comments or remarks?
Yeah, no, I'm just really excited for the launch of this new project, DefiDive. I'm really excited to share with the world what we're working on. In terms of just a cryptocurrency information website, I think we've got the formula down for being, a very useful website for everybody to bookmark, and a very useful source of information for whether you're looking to find out a little bit more about each crypto project, or whether you're wanting to just look at the price of the day. So yeah, this has been an excellent an excellent podcast. So thanks for conducting this. It certainly brings us down memory lane, and I'd certainly love to share some of the crazy stories we've had in our time back then,
Yeah,
running Magna.
yeah, most certainly. And for anyone listening or watching, if you want to keep up to speed with what's happening with DefiDive, if you want to hear when we launch, and if you want to hear our crypto news updates and our social media content, just make sure to follow us on Twitter, Facebook, Instagram, join our Discord server, and you can find us directly at defidive.com. And that's a wrap. So we'll see everyone in the next future episode.
Thank you very much, everyone, for joining. See you later.
Cheers, everyone. Bye.